I don't know. I don't get it. Gosh, I don't know anything about tax deductions, and now I'm losing tax deductions? Maybe I'll Google something. Maybe even search YouTube. How do I learn more about tax deductions? Gosh, this one guy says this one thing, and this other guy says another thing, and now Will's saying I'm losing tax deductions. I didn't even know I had them, first of all. I think I'm going to pass out. I feel a lot better. Oh, that's way better.
I can do this. I gotta shake it off. You know what I gotta do? I gotta pump it up. I need some music. We need some music. Advisorfi DJ, cue in the beat. All right. Let's do this. We're going to break down tax deductions, but in the reverse order. Okay, this is going to be tax deductions that disappear officially starting in 2018, going all the way to 2025, which is the period of time that Trump's tax reform is taking effect. So these are tax deductions that you're going to lose as a taxpayer. That's right, I cover the other side. I'm unbiased. I understand that there's also wins out there and there's loses. So these are the top 5 tax deductions that you're going to lose, okay? Hey, listen, what can I do? And for all you slackers out there, including me, who have not filed their personal tax return yet, you have 6 days left until your tax return is due. So this is not going to affect you in 2017 because the 10/15 deadline is for the 2017 calendar year. But I figured this video was very appropriate. Why? Because I clearly have nothing to do. No, that's not true. I have a lot of tax returns to do. But I like this video. I wanted to do it, and I wanted to give you more information. So what I want to try to do is break down in this video, a little unusual from my 2-minute tax tip approach, but I want to break down in this video just the top 5 tax deductions that you're going to lose in 2018 going forward, because I've been asked quite a bit about any of the tax deductions that we're going to lose as taxpayers, and there are tax deductions that we're going to lose as taxpayers as part of the Trump tax reform or the Tax Cut and Jobs Act reform that was passed. So that's right. Come on. Yes, we're going to break this down. Come on, Matthew McConaughey. Give it to me.
All right.
Okay, so here we go. So here are the basics. Let's dive into the basics of this. So under the Trump tax reform, taxpayers who itemize, that is, claim expenses under Schedule A, under the itemized Schedule A, you should be aware that tax deductions that you may have previously taken before in the past, as far as deducting before in the past, to reduce your taxable income have disappeared starting in 2018, going all the way to 2025. And so here's the list of the top 5 that have disappeared starting in 2018, going all the way to 2025 until the Trump tax reform is either renewed again or whoever's in Congress and Senate, they end up rejecting it and we go back into the old tax system as we used to know it. Okay, so number 1, moving expenses. Well, prior to the Trump tax reform, if you were a person that spent money to move because it was related to a job or a job offer that you taken, so you're moving from one city to another or from one location to another. In the past, you used to be able to take all the deductions surrounding the moving for a job as a tax deduction on your Schedule A. But in 2018 going forward, moving expenses are no longer tax deductible unless you are a member of the armed forces. Thank you, men and women out there, for your service. I appreciate it. Yes, if you are a member of the armed service on active duty who moves because of a military order. So those are the only tax deductions that still exist in the Trump tax reform. So if you have moving expenses in relation to a job, all of that has disappeared unless you're active military and you're moving because of a military order. Pretty simple, pretty straightforward. Number 2, unreimbursed job expenses. Now this can be fairly popular. Now for the most part, a lot of employers reimburse employees for job-related expenses, but if you're an employee that for whatever reason you spend a lot of money on behalf of your job but that your job does not reimburse you for, this tax deduction that you get on your Schedule A, so prior to the tax reform, if you had any kind of miscellaneous unreimbursed job-related expenses And the technical terminology here is that that exceeded 2% of your AGI. You were able to deduct that before in the past. You're no longer able to deduct that under the Trump tax reform. So what are some examples of this? So well, examples are like union dues, continuing education, employer required medical tests.
Turn your head and cough. Just as I suspected.
Regulatory and license fees, out-of-pocket expenses paid by an employee for like uniforms, tools, supplies. There are a couple industries that I think that could be affected here. Like if you're a mechanic, I know a lot of mechanics pay for their own uniforms, for their own tools and supplies. So I could see this deduction really affecting mechanics or anybody who's really paying a lot of money out of pocket for equipment because they're a carpenter, a mechanic. So any kind of blue collar worker, I can kind of see this particular elimination really affecting if they're spending a lot of money early on. Now, obviously, if you are in those, blue collar union jobs, a lot of those expenses generally are acquired in the first or 2 years, and then miscellaneous things here and there. A lot of mechanics and cabinet makers and all these kind of individuals who make all our products, a lot of them don't spend a lot of money every single year. It's generally in that first or second year. So I can see this really affecting people who are kind of entering in, becoming mechanics, and are trying to get supplies up that are theirs that they own. Okay, number 3, this really affects obviously taxpayers, but tax professionals as well, because we don't have the luxury now of saying this particular item. But number 3 is tax preparation fees. So tax preparation fees for your personal tax returns have been eliminated starting 2018. So tax preparation fees can include things such as payments to accountants, tax prep firms, as well as the cost of tax preparation software. So if you spend $20, $30 to buy TurboTax because you do your own personal taxes, the $20 or $30 is now been eliminated as far as your personal tax deduction. Or if you pay an accounting firm a tax prep fee to prepare your personal tax return, that payment of the fee has now been eliminated off your Schedule A. So this particular tax deduction is now gone starting in 2018, going all the way to 2025. Number 4, yes, personal exemptions. Now this is fairly huge because we've always had personal exemptions for as long as I've been around and as long as we've known it. And I do want to say that personal exemptions were eliminated. It was offsetted by the tax reform doubling the standard deduction. So while personal exemptions were eliminated, the standard deductions were increased. And I think it was increased to accommodate the elimination of this personal exemption, as well as the child tax credit was doubled. So from $1,000 a year to $2,000 a year to help offset some of this personal exemptions, because you can get a personal exemption for your children, for dependents and stuff like that. So repealed for the 2018 year, going all the way to 2025, personal exemptions have been eliminated. And so while the standard deduction did increase significantly, so like $12,000 for individuals and for married taxpayers filing jointly, and $18,000 for head of household, I do want you to know that even though the standard deduction has been doubled in most cases, so doubled as an individual, doubled as a married filing and jointly individual, and for head of household, there are some instances where you may still lose out as a taxpayer because of the elimination of the personal exemption. But a lot of it is very, very case by case, and so you can't really say with a broad brush that everyone's going to lose out, because everybody's personal tax situation is very different from the next. Okay, and last but not least, we made it to the end. Number 5, subsidized parking in transit. So this really affects a lot of commuters that are commuting for work. So before the tax reform, employees could take advantage of a perk offered by many companies or by many employers, where by parking and transit pass costs up to $255 per month in 2017 were reimbursed to their employers tax-free. So this was a benefit that the employer was giving employees, where you can give them $255 per month, and that was a tax-free benefit that you were getting from your employer and a tax deduction for the employer. But in 2018 going forward, this particular perk was completely eliminated under the Tax Cut and Jobs Act. So basically, these reimbursements were not included in the employees or in your employee paycheck as taxable income, and were tax deductible for companies on their tax returns. But in 2018, the employer deduction is no longer available, and the employee can still receive the benefit as far as getting reimbursed, but the company can no longer take the deduction for giving a reimbursement. So while some companies may still continue to do and give transit costs as reimbursements as part of employee perks and value added for the position, There may be instances where the companies may cut this all together because they're not receiving a deduction. Okay, listen, hey, that's all I wanted to do. See, huh? We did it. We did it. Come on, Matthew McConaughey, let's do it.
All right, all right, all right.
Okay, well, hey, listen, hopefully this video explained at least the top 5 tax deductions that you end up losing as a taxpayer if you itemize. Now, if you don't know if you itemize or not, speak to your accountant, look at your prior year tax return, look for a form called Schedule A, something to that effect, and see if you end up itemizing and see if any of these tax deductions end up affecting you. That's it. Hey, thank you guys for watching. Hopefully this video answered all your questions. Don't forget to subscribe. We're going to try to continue to release more videos this year, and stay on top of everything that's going on out there as far as accounting and business and taxes. And don't forget about filing your personal tax return. The deadline's coming up, which I gotta go do this right now and file my own tax return. Okay, I'll see you guys later.
Thank you for
Watching. Be sure
to follow us for more
business
and tax reform information. Hit the
button
below to follow. Hit the video
over
there for more. If
not, I am going
to touch your spec,
get
thank you
America
and
see
you at the
next
video.